Good evening, guys. Today we are going to discuss about how we are going to do more on the stock market. So there are so many ways of selecting those stocks, and today we are going to discuss about one step at a time. Because many people were asking me, why don't we do more on the stock market? Because if we trade on ETFs, it's kind of slow. It's like a tortoise, and the process is that we have to go by the rules, and the rules are very standard today is to divide in investment goals. When you look at the way we talked about the ETFs, this is a kind of same, but now this is more into details and into more like technical analysis, into more like candlesticks analysis and such. So it's more about studying. So you have to put more time to study the stocks you want to invest in. So the objective is, first of all, you have to understand your objectives. This is a long-term investment or just a short-term investment. It's like there is scalping, and there is day trading, and there is long-term trading. So it's upon you, on your situation. So remember, the game is risk tolerance. Risk tolerance, you have to assess your risk tolerance. Risk tolerance is when your market is going down, buy more. And if it continues going down, buy more. It's simple to follow if you have patience. And if it is going down and you panic and you sell, that's not the game. We buy low, we sell high. That's the game. So if you have the risk tolerance, then you consider factors such as age, financial situations, and time also. If you know you have a risk tolerance, then look for money. How much you want to lose, how much you want to put in the market. And then you get yourself, which the time period. That's what we want to understand. Okay, I'm coming to this game. I'm putting down my money. So what range am I going to say, okay, I'm putting my money for in 2 years time, or in 3 years, or in 5 years, I will see what I have made. But remember, don't keep your money, all your money in the banks. Invest. And I asked some of us the last time I said, wealth is made in the stock market. The banks are investing in the stock market. The big companies, the big techs, Apple, software, name them, they are traded in the stock market. So if those companies are investing in the stock market, why not you? Because we don't know why the market was made of. So right now we are trying to inherit young kids, young children. When they grow up, they are following our footsteps. And that's why I'm here, to give out some green light on how you are going to invest. The next step we are going to do is, after doing your research, you will have a broader understanding of how you are going to trade those stocks. And before I go further, I will say that when you are doing your research, what kind of stocks you are buying, the percentages are there. So, for example, if you see my screenshot here, you will see how Warren Buffett, for those people who don't know, Warren Buffett is the guru of the stock market. What are they investing on? If you go there and see what they are investing, and they don't have the capability of going through each and every stock, that's what we call copy and paste. But that's not advice. That's not a financial advice. So some of us, we started there. We just copied and paste. So but the best ways to do is analyze yourself. Evaluate each and every company you want to invest in. Look at the financial statements like balance sheets, income statements, cash flows. That way you will understand the stability of that company. And that's why you want to step in and invest your money in. By considering value metrics like price to earning ratios. So if you go through, you can see on the screenshot I'm going to pin on right here, you can see the P ratio, what I mean by, that's the price to book. So, and the earnings. Consider buying dividend stocks. Most of the dividend stocks, they go kind of slow a little bit, but they have dividends every month. Some they have like after 3 months. That way, even if the stock is not moving really quick, really faster, but your money are generating income, passive income.
But the advice I would give is to read everything in sight, and to start very young. It's a huge advantage in almost any field to start young. And if that's where your interest lies, and you start young and you read a lot, you're going to do well. I mean, there are no secrets in this business that only the priesthood knows. I mean, we do not go into temples and look at tablets that are only available to those who have passed earlier tests or anything. It's all out there in black and white. It's a simple business. It requires qualities of temperament way more than it requires qualities of intellect.
The main thing about all these things is you have to diversify your portfolio. You don't avoid putting all your eggs in one basket. For example, if you want to buy, for example, Apple, you don't put all your money buying on Apple stock. No. So what we do, we diversify our portfolios against sectors. The sectors, if you learn more about it, you will understand what sectors I mean. By sectors, I mean like there's tech stocks, like software stocks, there's energy stocks, there is healthy stocks, and so forth. So when you diversify your portfolio, you will see on my screen right here, you will see how they are diversified. So you don't put your eggs on one bucket. In so doing, that way you don't lose your money at one point, at one stage, because if like, for example, tech stocks are going down, the energy stocks are going up. If healthy stocks are going down, the financial stock institutions, their stocks are going up. So there's so many diversification where you are supposed to. So again, when you are investing this kind of stocks, consider professional advice. What I mean, professional advice is like, for example, when you are investing in a Fidelity, there is a robot advice services whereby you fill your information, your details, and then they generate a portfolio according to what information you gave in. For example, if you put information about your age, your financial status, your income, and how much you want to put in the market, and then they will build for your portfolio, invest in this kind of stocks. So that way, they give you a portfolio specifically for you. And if you give a wrong information, they are going to give you a wrong portfolio. So if you want to invest, and you feel that I want to put like $100 every week or $100 every month, and then they build a portfolio for you with the different kinds of stocks from different types of sectors, and then you invest. So that way, you are investing through the advice of a financial advisor. That way, you put money where it's supposed to be without guesswork. So that way, you will start making money. And that's how the market is. And that's why the market was created. It was created for us to put money there, buy low, sell high. And now those people who are asking me a question, now you understand what I'm saying. So I will show you on the diversification, different kinds of portfolios. On my side, I will show you mine, how I have diversified my portfolio. That way, you will be able to see what, like for example, for Warren Buffett, I'm going to pin there to see what kind of portfolio he has. So that's why I was trying to say, okay, if you don't know where to start from investing, after buying the ETFs, now consider buying the stocks. That way, there's a mix of meme stocks and there's solid companies. You see, so when you mixture of that one, your portfolio is going to move a little bit faster than the ETFs. So good people, consider subscribing to my YouTube channel. Click that bell, subscribe, and comment. And now you want to buy. So when you want to buy, do you understand the candles? Do you understand the indicators? So the candlesticks, you need to understand when it is red, what does it mean? Where the market open candlestick means a lot. It's not just colors. They mean a lot. And then there is moving average. And there is what we call it, the MACD and the RSI. For me, I use those three. So when you use those indicators, they are going to tell you where to go in. Is it 15 minutes? Is it 1 hour? Is it 4 hours? Or is it 1 day or 1 month? So when you look at, you will see where the market trend goes. And the big thing you need to understand is the trend is your friend. You can't go against the trend. So if the trend is going up, follow the trend. If the trend is going down, same ways. And where the market closes, when it is green, it's the same. Where the market opens and where the market closes. Investing, then before you put your money there, understand the candlesticks, understand the indicators, because they are going to be your friends forever. So guys, I think I've explored what I wanted to discuss today. And if you have any question, please let me know. Thank you.